Welcome to TradeTheMBA.com. This is John. This report is for the 1st of December, and well, we had a nice little holiday break there, and of course, there was still the exuberance, but that's kind of faded now that we started. And we're about to enter a really awkward period where typically you have your seasonal benefit, but a lot of headwinds given where things have gone to this point and a lot of the uncertainty. And of course, this push to end the war is has a real economic reality to it. The idea is that Trump, from their view, they know they need lower energy prices, and not going to happen as long as that conflict exists. And you have continued sabotage. You saw in the Black Sea that they actually sunk some tankers of commercial vehicles, which they claim to be the shadow fleet. But that all creates uncertainty, and that kind of uncertainty is just not good. I mean, you look at the balance of the economic situation. In America, it's mixed depending on region and where things are at. We're also starting to see much more of that dramatic impact that I talked about, where energy prices in areas where there are AI centers starting to become excessive relative to other areas that don't have data centers, and that's that drain that AI is taking. As much as they keep pumping into it, and then you get at the question: it's like, okay, well, everyone's pre front loading all these chips and buying and everything from a Nasdaq standpoint, but what happens at some point? They're going to have to generate returns off of that. And this is same situation that happened back when DSL and the internet and everything started to shift, and you had WorldCom and those, where they were laying all this foundation. There just wasn't enough demand at the time. It hadn't quite developed to that. So we'll see if this is able, in a much more mature environment with the internet, to be able to generate something from it. But of course, have businesses counting on this just reducing labor forces. Well, that has a secondary knockoff as to what happens from a social standpoint. And of course, when we look at both from Treasury standpoint, gold. If you have all these unemployed, what's going to happen to the budget situation? And that's going to start to explode. Not that it already isn't exploded, it already is. And that relative pressure where interest rates are currently is expensive, given the amount of debt that you're carrying. And you can see here with the oil. Hanging on at the lower end of things, but it's still relatively. This could be our new baseline, as we were talking about before. That below this is just not enough incentive, given where inflation has taken things. That anything can shift, but a significant move lower there, you could get into a quasi deflationary situation that abates some of the inflation that took place. That's an ideal situation for consumers, not so much because current economic models really don't handle deflation. They get scared with it because they don't understand, their view of GDP, and that is just doesn't matter whether anything has been created or not. If a company buys back stock, it's considered, GDP. You didn't make anything, nothing happened, but this is that convoluted approach to how it's calculated. And we can get into the specifics of that. From a Euro standpoint, the European Union is in a world of hurt, and they're just being propped up. And of course, this is Fed liquidity that keeps that from imploding worse than it is. And of course, they still believe that tariffs are going to undermine the U.S. economy completely, even though you keep recording record numbers. But even with record numbers coming in for their tariffs and that, you're still looking at these massive deficits that do nothing but say to gold, keep going, because it's your only hedge against what is going to be a continued debasement at relatively high speeds. From a Bitcoin standpoint, still no support found whatsoever. Again, we get back to the other secondary argument. At what point do these cryptocurrencies have a transitional impact into regular purchasing power? And while it's improved, it hasn't been significant enough. And that's a secondary problem going forward. Will it be able to maintain that? And of course, under the pressure of selling with, the crypto nightmare that took place, where a lot of people liquidated in that's all going to get worked out. And again, it's these little blips. You want to call them black swans or whatever. I don't think they really are, but they're more or less knowns. And this is going to create more headwinds. I think it's just going to be hard to keep pushing forward, given what valuations are. When we look at it here from our 50K, it's not a bad scenario. Nothing's ugly. I mean, you've had this nice smooth run. Actually, in my updated program here, if we take a look at it, you get a little different view from a paint bar standpoint where the original buy situation took place all the way through, and you can see we're continuing to ride very comfortably now, right at the 76%. Um, but you still DOC from a reset standpoint. Yes, you're in a DOC spread, so a little bit of weakness, and orange is now dropped in between. So we're in a slight continuation mode, but not inconceivable that dips down and wouldn't be take much here for a turnaround in the DOC red with a green pop back. It's only minus 15, not horrible at this particular stage. You did have the dip below the red line. That's been nearly satisfied. A little bit further back down would be more than enough to cover it. So we'll watch that shake out. But intraday, this is a normal retrace. You got a lot of positive extremes from what took place right before the holiday, and that to fill back in. And now that the players are going to be returning, that's definitely going to be something they'll look at, evening out things. We look at it from that shortened intraday, the European session, and that pretty much moved things forward. But as soon as the post-holiday futures open, it was pretty much ugly through Asia and a slight rebound here in the European session, but not very much. It's still likely to be a pretty significant lower open to start the month, and that's just going to be again then the question of rebalancing. How much do people get a little scared and decide to rebalance into other areas, and that's going to create a lot more churn and um, likely weakness within that. So, yeah, definitely without the indicators, you're in a world of hurt with this period coming forward. So it's going to be interesting. As always, have a good one. Trade well. Anything relevant, I'll put it on the team chat, and indicators have already gone out. So all good.